Hello, I'm Michael Climes and I'm the acting editor of Money Marketing. And I'd like to welcome you to our newest episode of the Consumer Duty and Protection podcast series, which we're doing with our sister publication, Mortgage Strategy, in association with Royal London.
Hello, it's Amanda Newman Smith here, feature writer, and today I'm joined by Royal London and a financial advisor. So if you could both introduce yourselves, please, that would be great.
Good morning, I'm Shelley Read and I'm Senior Intermediary Development and Technical Manager here at Royal London, and I have the great job of talking to advisors all day, every day, and helping them to have real compelling protection conversations.
I'm Robyn Allen. I have a company called Robyn Allen Solutions and I'm a protection-only advisor who talks about death all day and has a great time doing it.
Great, thank you for that. So today we're going to talk about the consumer duty again. Today I think we probably need to look at the outcome side of things. So that's sort of really where I want to kind of start really. So Robyn, as an advisor, what would you consider a good outcome for consumers, you know, when deciding on protection policies and making those decisions?
For me, it's multi-layered. A good outcome is they have something that they see the value in, so they're willing to see that direct debit going out every month and they understand it, that they fully understand the products that they have, but they also fully understand the products that they may not have taken and the risks that leaves them with potentially in those events, so that they have a big picture of, if this happens, I've got this to support, but if this happens, I said I was willing to deal with those particular consequences. So if they walk away fully understanding that, I'm happy.
Shelley, do you want to add anything?
I think, I agree entirely with what Robyn's saying. I think a good outcome really is peace of mind, being able to sleep at night. And whilst budget might not allow Rolls Royce cover from day one, having some elements of cover in place, I think is really looking to create a good outcome for the clients, and knowing that it's flexible and it can change. But, you know, as Robyn clearly does so superbly well, making sure that clients are aware of the risks, because I think a lot of the general public who aren't involved in this industry don't really stop, because it's not a very pleasant thought, is it, to talk about what happens if one of us die or one of us gets diagnosed with cancer or has a heart attack or indeed has an injury and is off work for a while. Most people don't give much thought to that because, as I say, it's not really a great thing to spend your time thinking about or talking about, is it? So I think an outcome is having some protection in place that would mean that, to an extent that they're happy with, the client's happy with, they can maintain their lifestyle, they can keep their house and look after their family.
Okay, you mentioned costs there. Robyn, can I ask you something about, do you prioritise those risks? Because, like we've all got budgets, it can't sort of stretch across every little thing. And in an ideal world, I guess we'd have, every single bit of cover in place, the maximum. But reality is that, the money can only go so far. So how do you ensure that is a good outcome for someone on a budget that maybe, not a limitless budget?
See, I agree with Shelley. You need something rather than nothing, because something gets us somewhere. For me, it's all about positioning with the person I'm talking to. It's me spending the first probably 40 odd minutes of an hour just talking about them, just finding out about them. Because when you then get to the point of having the actual conversation about, right, these are the insurances available, let's talk about them for you, I've then got an understanding of, right, it's really important to them to pay their mortgage off early. So that's already coming down with overpayments. So I already understand what their net disposable income is. So I've got an idea of what realm we're probably going to be in terms of budget. But when I'm talking about the insurances, I'm not putting any barriers in the way. I'm going, right, let's talk about, if money was no object, what would be your ideal for each of these particular things? it's then my job to have understood my client enough to go through, and when I'm looking at it, if I can't do perfect, to understand their priorities and cut it. But I show my clients, I take them on the journey. So I go, right, I looked at this. This is what it was going to cost, and this was going to take up all of your budget. From what you told me, these things were still a priority. So I've tweaked this, I've added this, done this, and this is what I've ended up with. Am I on the right track? And because I've understood them, they've gone, yeah, absolutely.
Right. I see. No, that just puts it all in perspective. So now, in terms of value for money as well, because that's one of the considerations of the consumer duty, isn't it? Value for money. I mean, how, as an advisor, how do you sort of approach that, value for money? Because it isn't just price, is it? It isn't just about premium and how much you pay. So how do you look at that as an advisor?
It's so, I'll be honest, it's a big responsibility, because you're looking at these list of prices. You're going, okay, you've got cheap. Am I trying to shoehorn something else into this solution? Have we had a massive conversation around quality? What added benefits do I think would be beneficial? But then you've also got to throw into mix, have we got an underwriting issue? Have we got an existing medical condition that's also going to be thrown into that? So what is the cheapest to start with, once you've included a loading, might actually be the most expensive, because that insurer has a particular line on that particular condition. So it's a constant game of chess, if I'm honest. But we have resources and we have tools. You have things, you've got CI Expert, you've got Protection Guru, you've got all of these resources around so that you can make the best choice for your client. But at times, sometimes it's so close, it's eeny, meeny, miny. That one will mean they're with 2 insurers instead of 3.
Sure.
Because you also can't be scared about using multiple insurers, because if it gets in the best overall solution.
Okay.
Yeah. I think the only thing I'd add to that, Robyn, you're absolutely right. It's not all about price. Price might be a starting point, but if you know your client well enough and you know about their lifestyle and what's important to them, then there are other things to take into account. So there's all of the added value support services that are available that might be critical right now in someone's life, because a lot of these support services can be used, from the day the policy starts, not just at point of claim. And it's also things, I'm trying to think of an example now, maybe something like, fracture cover that might come with a particular policy. For someone who skis a lot or rides a horse, then that might be, particularly relevant for them, and it might give the best value in there for their policy.
Can I ask about non-working spouses as well? Because I was reading something, I can't remember where, sorry about that, but I was reading something which was talking about, if there's a couple and one of them works and one of them doesn't, if something happens to the one that doesn't work, probably a bit like your example from the last episode, Robyn, where there was a couple and, the partner died. But, if someone doesn't work, that's going to make a huge difference to someone's life, even if, they've got a job and they've got to sort of, if they've got children, they've got to cover the childcare, they've got to do everything, where the person that stayed at home sort of did all that to enable that person to go out to work. I mean, will an advisor have to look at that sort of thing in the future?
All the time. If I had £1 for every time they've gone, oh, we need to insure them for more because they're the working one. And I'm like, really? Let's have an actual chat. Because they don't realise the impact. You have to really explain you are living your lives as a pair. You are a team. If you suddenly lose your teammate, you lose 50% of the support. Now, yes, this person may be working and it's having the balls to say to them, right, your non-working partner has died. What are you going to do? Are you going to go back to work the next day so you can pay the bills? Or are you going to want to stay home with the kids? Are you going to want to do the school run? Are you going to want to be able to turn up for sports day or theatre or awards days? What are you going to do? there are some people out there who want to get back to work. That would be their safe space. They would have family support. Fine. But there are others who go, actually, no, I'd want to be at home. And it's being able to be really forthright with them and go, right, tell me, what would life look like?
Yeah, I agree entirely. The only thing I would add to that, it's, again, having these really difficult conversations. For any parents out there that are listening, it's not a great conversation to talk about, what would happen. It's an even worse conversation to talk about things such as guardianship and, what would happen to the children if sadly something happened to both of them. But I think, again, going back to our core subject today of consumer duty, I think that the FCA are, again, in putting the advisors in the shoes of the client. What would they, want to happen if it happened to their family, and ensuring that whatever wants to happen, as Robyn said, some widowed parents would want to go back to work and be able to have the funds to have some childcare for their children. Others would want to totally give up their job and be at home. So I think once you've had that decision, then, as we all know, there are products available out there that will make that happen. So things like, as an example, family income benefit is one of my favourite insurance products, but it's discussed very little, to be honest. But for families, it's a great cost-effective way of arranging some cover, and it could be crucial in providing an income, even for someone, as you said, Amanda, that isn't actually working, as in, an income coming in on an employed status.
Yeah.
Yeah, it's also about being creative, isn't it? Because I've had parents before where they both have very different approaches to money. One was a spender and one was a saver. So we ended up doing family income benefit on the parent that was the saver, so that the spender only ever received a monthly stipend if something happened. Yeah. Whereas because they were the saver, I'd rather have a lump sum because I would go and do the right things with it and I would make it grow. So we actually did two different types of policies on a partnership because they had different approaches to money.
Yeah, understood. Yeah, that is so important, though, isn't it? Because how else would it work? Yeah, can we talk about a little bit wider than suitability of products now? What do you think about, the advisor's responsibility to talk about trusts and stuff like that? Because Shelley, you mentioned that earlier. I mean, is the consumer duty going to make that more of a priority, do you think, for advisors? Shelley, can I ask you first?
Yeah, I think it's all about, Amanda, coming back to the best outcome for the customer. And, in many occurrences, then maybe not now, but at point of claim, then it would be really imperative that that plan is written in trust and outside of estate. So I think all sorts of things are going to be encouraged to be discussed by the advisor that maybe they haven't before, and it's not just about doing the right thing for the consumer, but I think also being able to really document that and show that you have had, as the advisor, you have had those real robust conversations.
Robyn, do you have any thoughts on that, Jill?
I have many thoughts on trusts. Obviously, absolutely 100% need to be done. The providers that are giving the online provision to put the trust through at point of application, fantastic, because let's not lie, trust forms, they're not user friendly. And advisors like me, I'm talking protection all day. So I get used to these forms. I understand the terminology. I understand the tiny little box that's slightly hidden on one form that you need to make sure you point an arrow at. But if somebody isn't as familiar with these documents, they can seem incredibly overwhelming. So then they have to take this document and get it explained to their client. And when you're used to being an expert in something and then you're kind of going, I don't really know what I'm doing, that throws up a barrier. So there's also an argument for trying to make these things more user-friendly for the advisors. It's the absolute right thing to do by the client, but we need to try and remove some of the barriers that are preventing the advisors from doing it, so that there is more of an uptake.
Yeah, because they can be quite complicated, can't they? I've looked at them myself and had someone explain it to me. And bearing in mind, I'd had like a bit of industry knowledge, like with the journalism. Imagine trying to sort of, understand that when you haven't. So, yeah.
Yeah, I think it would be great if all of us as providers had one standard set of trust forms, but in truth, I think that's unlikely to happen. So again, as providers, I think we have responsibility to make it as easy as possible, for you ladies and gents out there giving advice. So things, I can only speak from the Royal London side of things, but things to help explain trust to clients, I think are crucial. And tools to make sure that very first time you get the correct trust form for those individual circumstances. So again, I think that will be an ongoing responsibility from providers to help have conversations around such things as trusts.
That is the dream, though, Shelley, to have everybody have the same. Also, call them the same thing. Don't even get me started on that.
Yeah. Yeah, well, I know it's not that easy, and I think trusts are surrounded with very archaic language, aren't they? But and settlers, donors, they can mean the same thing. But yeah, I think we're hoping a bit against hope there, Robyn, that it will all become very uniform. But let's try as providers to make it as an easy journey as possible for you, ladies and gents, as advisors.
Can I ask you both about, sort of documenting all this now? We've talked about various things that advisors will need to do and start looking at if they're not doing it already. But, Robyn, do you anticipate, this being difficult to kind of show evidence that you're actually doing this stuff? I mean, you've been doing it day in, day out for I don't know how long, but, will that be a change for you?
No, in all honesty, but my background was banking. So I was a financial consultant in a high street bank doing protection through there. So when I worked there, we had the hierarchy of needs. So you must fully address the mortgage life cover need, then fully address the mortgage critical illness, then fully address any additional. So we had to deal with that. So I'm from the school of, if you don't address a need, you need to fully explain why you have not addressed the need and that the client understands the consequences and the potential financial impacts of that. So when I am putting my notes on, I do that already, and I fully explain the conversations I've had and how we've reached a value and how we've determined a term. So for me, I already do really robust notes. But I also understand those that have never worked in a hierarchy, have never had to do that, will find this a bit different, potentially. That was a nice way to put that, wasn't it? But again, I think there's simple processes, there's simple guidelines, there might be simple ways of showing examples of text that they can then input and change and make it easier for them to tackle it, because once you've got the templates and you start understanding the language, it's simple from there.
Yeah, I think the only other thing that I would add is that we don't really know how the consumer duty is going to be monitored as yet. I'm sure we'll hear some more news over the next few months. So we don't quite know how it's going to be monitored, but knowing the FCA, maybe we can look at how they've worked in areas such as, DB, transfer market, etc., and look how they've monitored that. And I think when we look back at some of the outcomes of that, 70 to 80% were picked up as not being wrong at all. The advice wasn't wrong, but maybe it was unclear because the documentation wasn't robust enough. So I think it's not just about doing the right thing for the consumers, but really being able to document it in almost, right minute detail, really. So if the FCA turn up tomorrow, they know what's been done. And if your notes and documents aren't clear, then I'm sorry to say, but going forward, they've got to be. I think firms need to really monitor and review what they're doing and record those outcomes. And if there are some poor outcomes, if something happened, then show and document why it happened and show how future advice is going to try and avoid that happening again. And as you said, Robyn, having processes in place that can really adapt and change as products and services and and policies and practices evolve.
I just want to ask one more point now about signposting. We touched on it earlier, so I'm not anticipating a really lengthy conversation about this. But Shelley, what are the options for advice firms? They can either do it themselves or go to a protection specialist. Sorry, so
yeah.
Over to you, because I'm losing the ability to speak.
No problem at all. For me, signposting is one of the most critical things that I think is going to come out of the FCA Consumer Duty. So those advisors who, for whatever reason, don't have that protection conversation or only have a very fleeting mortgage protection conversation, then that's just not going to be an option any longer. So signposting has become a bit of a buzzword over the last few months regarding this. So I think for advisors who, as I say, for whatever reason, it might be time, it might be knowledge and expertise, for whatever reason, they're not going to have that conversation. They need to make sure their clients have all that information and an in-depth conversation to make an informed choice. So it could be, if you're a multi-RI firm, then you have a protection expert. I see more and more companies having someone who only talks about protection. And as we said earlier, they'll have all of that knowledge and expertise built up. But if you are a smaller firm or a one-man band, then you need to make what might be seen as quite a brave move to refer your client to someone outside of that firm. Now, if you belong to a network, that might be a little easier, because there will be firms who are out and out protection specialists that I'm sure your network have set up some sort of signposting route. But if not, then I think as advisors, you'd need to look, locally amongst your peers for someone that will, do that really critical role of having that protection conversation.
Thank you, Shelley, for that. And Robyn, what are your thoughts on signposts?
They need to do it. They don't do it. It's naughty and bad that they don't. I think if you don't have the conversation, or you don't have a robust conversation, you are doing your clients a disservice. I will say that all the time. But they need to not be as protective of their clients. Go and find a protection-only advisor that you vibe with, has the same ethos as you, so that you can learn to trust them to hand your clients over to them. And especially if you're a mortgage and protection advisor who just doesn't want to have the protection, you've not got time, hand them to a protection-only advisor. They can't poach your business. There's nothing to stand on. They're not going to tread on any toes. We just want to make sure that client has had the conversation and is protected. It's really simple. But for whatever reason, everybody gets very territorial. And we kind of need to break those walls down, I think.
And there is an upside to signposting too. As Robyn said, if you're signposting your clients for their protection discussions to someone like yourself, Robyn, who just talks about protection, you may well have instances where some of your clients need advice about a mortgage or about some investments or their retirement strategy. So, there is a chance for it to become, a really good, lucrative reciprocal arrangement.
And what protection advisors are great at is building trust. So if you start talking to them and seeing if they're a right fit for you as somewhere to refer your clients, you will get to know them fairly quickly, because those of us that we do this all the time. We will be very honest and open of, this is how we deal with our clients. This is the way we do it. Does this suit your way as well?
Great. Thank you both for your time. We are now done for today. So bye-bye for now.
Thank you.
Thank you.
In the next episode, we're going to discuss the consumer duty in relation to the cost of living crisis and look at how advisors can make sure they meet the expected requirements of the new duty when their clients are under increasing financial pressure. And if you want to read Royal London's research report, Counting Down to the Consumer Duty, or get tools and resources to support your protection conversations, visit advisor.royallondon.com/building resilience.